Hey traders, Desmond here. Welcome back to the IronFX podcast. Today we are talking about trade entries because plenty of traders get the direction right, then enter like they are chasing the last seat on a flight. So let me show you the main entry types when each one makes sense and the traps that keep wiping people out. Think of a trade like walking into a building. A market order is the front door. You walk in now. A limit order is the side door. You only enter if price comes to you. A stop order is the emergency door. You enter only if price breaks and proves the move. And a pullback entry is waiting in the lobby until the market gives you the green light. Same building, different door. Timing is everything. First one, the market entry. This is the just get me an entry. You use it when momentum is already strong and you do not want to miss the move. It is also useful after a clean signal candle closes at a key level when you want certainty of execution. Right? The advantage is simple, you get filled. The danger is also simple. You pay spread, you risk slippage, and you can easily chase from fear of missing out. If you are hitting market because you feel late, that is not a plan, that is panic. Second one, the limit entry. This is the make price come to me entry. Limits shine in ranges, bounces off support and resistance, and mean reversion setups. In the edges, you often get a better price, a tighter stop, and a cleaner risk to reward ratio. But the trap is catching a falling knife. A level is not magic. In a strong trend, price can slice through your limit and keep going. So before you place a limit, ask yourself, is the market trending hard into this level, or is it actually respecting boundaries? Third one, the stop entry. This is the prove it first entry. A stop buy sits above resistance. A stop sell sits below support. You get triggered only if price breaks. Great for breakouts and trend continuation because you are not guessing. You are letting the market confirm. Now here's the brutal part. Breakouts are where liquidity traps live. Next, price pops above a level, triggers traders in, then snaps back into the range. So upgrade your stop entry. With confirmation, look for a break and close, right, or a break then retest that holds. Fourth one, the pullback entry. This is my favorite for newer traders. If a breakout entry is jumping on a speeding train, a pullback entry is waiting for the train to slow at the next station. You let the impulse move happen first, and then you enter on the retracement into a level or zone, right? What you want to see is the pullback losing steam, smaller candles, wicks rejecting the wrong direction, and price holding a prior level. The mistake is entering too early while the pullback is still dumping. Wait for a trigger like a rejection candle or a break of minor structure. Fifth one, the confirmation candle entry. This is the show me rejection entry. You wait for a price to react at a key level, then you enter after you see clear rejection like a strong wick or an engulfing candle. Right? The upside is you stop guessing. You are not buying just because price touched the line. The downside is you may enter later and your stop can be wider. If that happens, do not force the trade. Either reduce position size to keep risk constant or wait for a small pullback after the confirmation candle. Let me give you a practical example with Euro-Dollar. Say the 4-hour chart is in an uptrend and price breaks above 1.0900. Option 1, a stop entry. You buy the break fast, but you risk a fake out. Option 2, a pullback entry. You wait for price to retest 1.0900. Better price, but sometimes the retest never comes. Option 3, a retest plus confirmation. You wait for the retest, then a bullish rejection candle, then you enter, slower but cleaner. Here's my hot take. Newer traders should bias toward the pullback plus confirmation combo. Now zoom out. The goal is not to find the best entry. The goal is to match the entry to the market condition. In a trend, pullbacks and stop entries usually work best. In a range, limits and confirmation entries tend to shine. In messy chop, the best entry is no entry. And whatever you choose, define invalidation first. Know exactly where you are wrong before you are in the trade. Because if you do not know where you are wrong, you do not have a trade. You have a hope. That is it for today. Trade smart, stay patient, and I will catch you in the next episode.